Okay, everybody, welcome. This is part 2 in the webinar series, How to Amaze Your Friends by Picking Reversals hours or even days in advance. And in this section, I want to go over what is probably the most important aspect of being able to pick out these reversals. So we're really going to be focusing on the charts here. You can see I don't have a PowerPoint presentation up, but if you're taking notes, you may want to write some of these talking points down. The first thing I'm going to do is just give an overview of patterns in general. So we're going to talk about trading the logic behind the patterns. And then I'm going to talk about how these patterns all relate to the code, this insider code in the marketplace. So we're going to be talking about the times to trade as well. So the first three talking points are going to be the logic behind the patterns, what is this whole code that we're talking about here, and then why these specific times to trade. And then when I go through the actual trade, we're going to talk first of all in general about the thinking process. If you remember from the course introduction, I made it a point to say that the trading is a thinking man's game. It's not something that you can do reliably without really thinking about it. Okay, so even though you can set up these trades to be triggered automatically, this isn't some automated system that you can just turn on and forget about. The people that I know who have mechanical systems like that or computerized systems are constantly working with them and making sure that they are active, or not active but profitable, and that they haven't broken down completely. Then we're going to talk about a process I called looking to the left. This is a very important process that will help you when you're managing a position, when you're in a position or in a trade. And then we're going to talk about expected outcomes and expecting the opposite. Okay. Get a drink here. Pardon me. Okay. So with that said, let's just dive right in. First of all, there's a logic behind all of these patterns, and it's important that you realize that. Hopefully you've noticed that even though I do have the moving averages on my screen, I use them more as a visual check, a visual guide, if you will. But I don't necessarily rely on them exclusively in order to trade. In fact, most of the time they really just blend into the chart and I don't really see them unless I consciously make an effort to really step back and look at where the moving average is and what the moving average is telling me. So what we're really talking about here, and the main thrust of the course, is that we have got to look at the market in a logical, common sense way. Okay, so we're not just adding indicators to the chart, and let me just put one on here because I think it is going to be important, at least for you to see what I'm talking about. Okay, at the bottom of the chart now, you can see that there's what's called a MACD indicator. It's MACD, Moving Average Convergence and Divergence. That's what it stands for, and it's basically an equation that is trying to measure the overall momentum in the market. And you can see that there are a lot of different components or parts to this thing. Here's a dotted line, here's a dotted line. These dotted lines can be at different levels. You can change the levels of these dotted lines. Then you've got the red and the blue line here squiggling its way across the chart. And then you've got these little red and green mountains that are on the chart.